Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into Marathon Oil's latest earnings report for the third quarter of 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Marathon Oil has released some intriguing numbers this quarter, and I'm excited to break them down with you.
Great. Let's get started with an overview of Marathon Oil and their recent earnings report.
Marathon Oil is a leading independent oil and gas exploration and production company, primarily operating in the U.S. and Equatorial Guinea. Their third quarter report highlights a net income of $287 million, or 51 cents per diluted share, with an adjusted net income of $360 million, or 64 cents per diluted share. These figures reflect their operational efficiencies and strategic initiatives.
Revenue and profitability overview. Let's start with the financials. Marathon Oil reported a net income of $287 million for Q3 2024. How does this compare to their adjusted net income, and what does it signify?
Marathon Oil's adjusted net income stands at $360 million, or 64 cents per diluted share. The adjustments primarily account for non-recurring items like a $75 million deferred tax valuation allowance. This adjusted figure provides a clearer picture of their core operational performance, which is quite robust.
And how does this performance reflect on their earnings per share?
The reported EPS is 51 cents, but when adjusted for those non-recurring items, it rises to 64. This indicates that the underlying business is performing well, despite some one-time charges.
Operational efficiencies and future outlook. Marathon Oil has shown impressive production numbers this quarter. Can you elaborate on their operational efficiencies and future outlook?
Absolutely. Marathon Oil's production increased to 207,000 net barrels of oil per day, surpassing their guidance of 200,000. This is due to strong new well productivity and efficiency gains in drilling and completion. They've also raised their full-year production guidance to 192,000 net BOPD, while keeping capital spending unchanged, which is a positive sign of operational efficiency.
And what about their strategic initiatives, particularly the merger with ConocoPhillips?
The pending merger with ConocoPhillips is a significant strategic move. It positions Marathon Oil for enhanced scale and operational synergies, expected to close by the end of Q4 2024. This merger could potentially unlock further value for shareholders.
Financial health and capital management. Let's talk about Marathon Oil's financial health. How are they managing their cash flow and capital?
Marathon Oil generated a free cash flow of $659 million this quarter, which is a strong indicator of their financial health. They've also reduced their gross debt by $545 million and increased their cash reserves by $57 million. This prudent capital management is crucial, especially with the upcoming merger.
And what about their return of capital to shareholders?
They returned $61 million to shareholders through dividends. However, they've paused their share repurchase program due to the merger agreement, which restricts any increase in the quarterly dividend beyond the current 11 cents per share.
International operations and market position. How is Marathon Oil performing internationally, particularly in Equatorial Guinea?
Internationally, Marathon Oil reported an income of $95 million, with Equatorial Guinea contributing significantly. Their production there averaged 42,000 net BOD, and they achieved a realized LNG price of 10.76 cents per MSCF, benefiting from global LNG pricing. Additionally, they received $39 million in income from equity method investees, which bolsters their international market position.
What does this mean for their overall market strategy?
These international operations, especially in LNG, are crucial for Marathon Oil's diversification and resilience against domestic market fluctuations. It strengthens their global footprint and provides a stable revenue stream.
Key takeaways. As we wrap up, let's summarize Marathon Oil's performance and investment prospects.
Marathon Oil has delivered a solid performance with a net income of $287 million and a free cash flow of $659 million. They've raised their production guidance, indicating confidence in their operational capabilities. The pending merger with ConocoPhillips is a strategic move that could enhance their market position significantly.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Marathon Oil's performance in the comments below.